How's it going, everyone? Welcome back to another Quant update. Over the past couple of weeks, we were saying that Quant could actually, with a better outlook in the market at the time, could actually break through 80 to 84. Now, of course, it could just be a resistance retest. I left it red, as you know. However, I really was myself personally anticipating a further move that saw the break of the 20 moving average and this box area to pump into this newly formed bearish cross, which is between the 100 and 200. It's a very bearish signal. You can see when it formed a bullish cross, there was a huge move up previously. But in the end, when it actually came down to test as support in this area for bullish continuation higher, it was lost and flipped into support. That's why when we got down into the price of $73 for the very first time, and it seemed like for the following weeks, it was heading up higher, I was suggesting that I was expecting it to lower high underneath this high at $112, and it got to 112 exactly with the wick during the candle. It was up there. We can see for the close is actually just turning this previous support area into resistance. We can see previously giving bounces, now bringing these dumps, and in the end sustained that move down into a new lower low, met my significant target, $69. There is another target down at 62. That is what it's attempting to head down into. The only way it will invalidate that target is by maintaining $66. It's currently 67, so you could argue that it does have the right to bounce. But please do understand, just like this area over here, I was thinking it could potentially pump one more time and then go lower. You can see it never broke the 20 moving average. That's now sitting at $73. So it's coming into the apex. A move will be forced as price is being constricted and confined to the area of 66 and 72, a very small range. So a move will be forced. With how the market has looked over the last few days and the S&P 500 dropping 5% yesterday, we actually saw crypto and Bitcoin specifically holding up very nicely, very unexpected if you ask people that have been in the market for some years. So you could argue that's a good sign, or could argue that it's a lagged signal. A gap was created on the stock market chart. If we have a look, and usually they tend to get filled. Now, it's not open just yet. As of recording, by the time you watch this video, stock market is open. But as of recording, it's got a few minutes until it opens. When we get gaps, they do tend to get filled. But in this scenario, as it had stopped listening to the bullish TA, you can see previously when it had a dip towards the 200 EMA, a reversal happened, recovery of the moving averages, and then a continuation higher. So I was expecting the same over here. And that would have been Bitcoin holding the 200 EMA as well, because the charts look quite similar and the positioning of the moving average. But there was no bounce whatsoever, not even to the moving averages. It just went straight under, flipping this area into resistance over the past few weeks or over the past month. And now we're getting that continuation lower. If we fill in this gap over here, it's just potentially to fill it in before continuation with the downtrend. Now, it'd be terrible for crypto as a whole, including Bitcoin and Quant, but that wouldn't push me away from buying Bitcoin. I'm buying that whatever price. And then for altcoins, there's a really strict criteria. Even if Quant recovers 85 and 96 and 112, that starts a further move up into 154, but literally sounds annoying because by the time from 67 it gets to 154, would have already experienced over a 100% move. But you need to understand that until the moment 154 is flipped into support, it's the highest we could go before heading lower. So it's technically bearish underneath this level. I've shown examples in the past, on many occasions, but I'll briefly show you. This dip lasted many months last year, but there were many moments the bottom could have been in, and all it needed to do was sustain a move through the 886 and the dip would have been done. And that's why the dip kept on being prolonged, because it wasn't fulfilling the bullish criteria. Break the 886, it's bullish. It didn't do so, so it's bearish. And if it's bearish, the expectation is new lower lows. That is what a downtrend is. So we got those new lower lows, and I can place these fibs once again on this newly completed move down. Once again, it could have been the bottom. At the time, I was personally calling the bottom since I saw the 100 EMA lost and then recovered. This was an extremely bullish signal to myself. and we can see further bullish crosses. Everything's saying this should go up, but it didn't. It went to new lower lows, guys. And we need to identify this and learn from this, and we can see where it actually got rejected. If you want me to sit with you and teach you how to do this, consider the one-to-one mentorship plans on my website. The link is down in the description. If you want something more as a group, cheaper, check out the Discord community. But once again, I'll show you another example with that new lower low. As you can see, this low is lower than the last. Once again, getting up to the 886. It seems great living through it day to day. It feels like we're making progress. It feels like we're getting out of that negative situation. All to actually reject, get tricked and scammed into thinking that way, getting trapped, and then new lower lows, worse position than before. Of course, eventually, because Bitcoin is a deflationary asset over time, it should keep increasing in value. There is going to be a point it does eventually break that 886 fib. And we can see that in the next example. But guys, look how many months it took for the 886 to actually be flipped into support to get that continuation higher. We couldn't actually fully say at each of these bottoms, local bottoms, we couldn't say with 100% confidence that the bottom is in until that 886 is broken, because if you're watching my videos from back then, I called this the bottom when the moving averages were recovered. I called this the bottom. I called this the bottom, this the bottom, and this the bottom, because at the time, there was a significant move up from there. You can see in this case, let's go from the 20th of March up until the 9th of April. Guys, that's almost a month. Imagine day by day, it's increasing in value. It's recovering the dump. It's turning those moving averages from resistance into support and creating bullish crosses. So everything is step by step invalidating the bearish signals, but it's not breaking that final 886 level. That's all that matters, nothing else. So we could get bullish signals on Quant down here. I don't care until that 886 is broken. That is where me personally, this is just for me personally, that is where I could start trading it once again with confidence that the conditions are optimal. I'm not going to get trapped similarly to what we saw in this area between February. I had a few comments, a handful of them, slating me, going against what I was saying, even though there was validity to it, because we put in a new lower low. That means this previous area should just flip into resistance. But of course, because it's not what people want to hear, it will be pushed away to the side. But I guess because I'm not a holder, I don't have that emotional attachment, so I'm not going to be complacent to the signals. So when I see those signals, I will let you know. I will personally be bullish on Quant above $154. If we keep putting in new lows, this actually changes. So you can see with the new low put in 2 days ago, this I need to keep adjusting it. That is just how it works. So honestly, until that moment, we could start recovering 72, 73. That is a great first step. That's just going to signal a further push into the bearish cross. So even if 73 is recovered, it's just going to get rejected there and head back down. And it's meant to go to new lows because it's confirming the downtrend, right? The only way we're going to see this significant change, we need to invalidate these bearish signals step by step, but you can't do that until that final level is broken. Yeah, we can do invalidate the 20 moving average that's meant to act as the top to send us lower. We can invalidate that signal by recovering it, but that doesn't invalidate the next bearish signal. That's saying a move up into here should again go into a new low. Until that moment up there, it's suggesting any high that it creates should go into a new low, even if it reaches the 886. Technically, as you have seen on those charts provided today, it's meant to go lower. Guys, hopefully you got a lot of information out of this video. Please support the channel, like, subscribe, comment is really appreciated. If you want to get education, check out the links in the description. Follow me on Twitter as well, because there are some times where a week passes I might not be able to get as many videos as I want, just because I have to run the community. I've got stuff to do in my own life as well. But that is where I'm going to make these quick updates instead of videos. I will try to make the videos on a daily basis, but of course can't promise. So turn on that notification bell. Over 50% of you are not subscribed. So I'd like to see that changed in the near future. Hopefully we can hit 10K soon. And I'd love to see more of you learning from me in my community. Cheers.